All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Going to do two videos here. One, going to talk about, kind of this psychological torture machine that is the market. With a couple of requests that have come in, I figured this is a good opportunity to, take a look at some of these things. And then I'll stop the video and I'll restart the video. We'll go out and take a look at the market and some of the stuff going on out there. There are a few things that I'm watching out of the corner of my eye. So I'm going to actually leave them on the screen here. And, if something changes on a certain stock, I will enter it for the challenge. So I may have to briefly interrupt the video to go and do that. Alrighty. Now, the market's psychological torture machine. To me, that's what the market is. The market is an absolute torture machine psychologically for so many. And the biggest hurdle that so many have in the market isn't learning about technical indicators or risk reward or how to trade an option or how to do a spread. It's dealing with the psychological components of the market. And there are so many, and they are so intense for so many people. And in my experience dealing with a lot of people who, trade the market, new people, people who've traded the market for years, myself, everyone deals and experiences these tortures in different ways, in different time periods, and some are a little more intense for some traders, some are a little more intense for others, and so I've tried to put together kind of the 5 big ones that I see traders have to deal with, and we'll go and just take a look at a few suggestions on how to deal with them. But whenever we're dealing with a problem, right? The biggest way to solve a problem in the market or to solve a problem in life is to simply recognize it. Because if you don't recognize that's a problem, then there's no way you can come up with a solution. And 9 times out of 10, in the market, being aware is all the solution that's needed. Just understanding that's what's happening. It's all the solution that's needed. Now, not in every case, but, in many of these. So let's go break down. I don't have these in any particular order, but let's go with number 1, missed opportunity. Right? This one is one that is probably the biggest one that I see traders deal with. Oh, man, I should have gotten into this yesterday. Man, why am I not in this? Man, I just missed this market drop, or I just missed this market rally. And they're always focused on this missed opportunity component. Traders will have, myself included, I'll have a stock and I'll be looking and I'll go, okay, you know what? I'm waiting for this to trigger. It'll trigger. I go price it out and, the options just aren't good enough. And the stock goes my way, and it just, feels like a missed opportunity. In the market, missed opportunities are everywhere, all the time. In the time that I've been on this video, I've missed thousands of short-term trade opportunities in the market, right? Come on. If I would have just clicked the button on some SPY calls, I could have just gotten this 2-point move. Man, if I would have done weeklies on that, I would have made $600 just boom in 3 minutes. Man, that would have been so awesome, right? And it's really easy to do. It's really easy to do that because I already know what the data is. I already know the market just went up in the last 3 minutes. It went up 3 points. So I don't have to factor in any risk. All I see is the reward. And it feels like this missed opportunity for so many. Man, I just missed it. And so they're looking at what has happened instead of what could happen going forward. Because from a trader standpoint, what has happened? Who cares? What will happen going forward? Well, that's what you need to kind of look at and go, okay, what are the possibilities? And so many traders are so focused on missed opportunity that they end up just totally torturing themselves, just completely, killing themselves. They'll also do something where they've missed an opportunity, so now they're going to hyper-focus because they don't want to miss the next move. Man, I don't want to miss the next one. Man, I missed the last dollar on Halliburton. I don't want to miss the next one. Man, okay, is this time to get in now? Is it time to get in now? And they sit and they stare and they look so closely and they can't get away from it, and it just consumes them because they got to have that next opportunity, and they're starting to micro-focus on everything, and it just becomes torturous. Just becomes absolutely torturous. Missed opportunity, it's a fallacy in the market. It's something that always exists if you're looking in hindsight. But the reality is, what is the market? Well, you know how much money you have to trade with. You can control risk, reward, and exposure. And you have to look and say, hey, what could happen going forward? Not, what opportunity did I miss in the past? It's not easy. Not easy. Every trader goes through it. Some more than others. But it is a reality of trading and one of the biggest market psychological tortures out there. Number 2, right versus wrong. Man, is this stock going to go up? Is this stock going to go down? You go out, you do all the research, you look for all the opinions, you see that smart people have very differing opinions on the same thing, right? Someone who's been really smart, really right on with a lot of things, has a differing opinion from somebody else who's really smart and been right on with that same stock. You get caught in this right versus wrong game. Man, am I right about the stock going up, or am I wrong about the stock going down? Which way is it going to go? Which way is it going to go? Magic 8 ball, is this stock going to go up? Yes. Oh, no, wait, let me shake that again. Getting caught up in this just torture machine of right versus wrong. I got to be right. I know the stock's going to go up. I've got to be right. I know I'm right. Oh, man, I know the market's going to go down. I know I'm right. And then traders put on a time frame, which is even worse, right? I know I'm right. Market's got to go down. Oh, man, it did go down today. What? Oh, man, am I right or am I wrong? Instead of, patient and going, okay, when it happens, when I get my signals, I'll go after them. Until then, I'll be patient. No, I'm bearish. It has to happen today. It has to happen this moment. It has to happen this minute. And oh, wait, the market just ticked up. Oh, am I wrong? It is something that, drives certain traders just into an absolute tizzy. They can't accept the fact that, hey, in the market, some trades, they're not going to work. And so they apply this term wrong to trades that don't work and go, oh, man, what did I do wrong? What's the lesson? That's my favorite. What's the lesson to take from this? I just took a loss. What's the lesson? Well, most times there is no lesson. But the reality of the market is sometimes your trades are going to make money. Sometimes they're not. I've had trades where I've done all the wrong things, and I probably should have been in puts when I was in calls or vice versa, and I ended up making money, and it didn't mean I did anything right. It may have violated all my, everything that I really want to do, and I got lucky. There are other trades where I go, hey, it has everything I want. The odds and the probabilities are in my favor, and it goes against me. Does that mean I did something wrong? Does that mean now I got to change everything that I do? So many traders go with that mentality, and they use gain versus loss. They put it with right versus wrong, and they just end up in these choppy waves of, oh man, what did I do? They're constantly hindsight analyzing themselves, and one lesson that they take from one trade is the complete opposite lesson they take from the next trade, and they just get themselves so tangled up in this right versus wrong. Number 3, gains create heightened senses. What type of senses? Gains, think about when you have a big gain, right? And you take it off and you're out. For different people in different times, it gives them different senses. One of them is invincibility. I was right. Heck yeah. I know exactly what I'm doing. I just keep doing this again and again and again, and man, I'm going to be on a roll. Gives them confidence. In many cases, overconfidence. But perhaps the biggest heightened sense that affects traders is a gain increases the expectation of future gains. This is a big one. This is a very big one. I'm going to actually just take confidence out of here because, expectation of future gains is the one that I see traders get into. A trader sends me, hey, I'm trying this new thing. And I say, okay, great. Let me know how it goes. And the first 2 trades work. And inevitably, they'll send me and they'll say, hey, I just made $1,500 on these 2 trades over the last week. So what that means is next week I do these 2 trades. I'll make $1,500 next week. And then the week after I'll do 2 trades and make $1,500 that week. And the week after I'll do 2 trades and make $1,500 that week. That's $6,000 a month. That is $6,000 a month over 12 months. That's $72,000 a year. If basically at the end of every 6 months I take half my gains and up my trade value, that means I can increase it to $110,000 a year. And they build spreadsheets. This isn't just mental. They build spreadsheets showing this expectation of future gains. They had 2 winning trades on something they just started and tried. And all of a sudden, they're compounding that not for just another week, not for just another month, but for years to come. Incredibly dangerous. Because what happens? Well, if one of those trades next week goes a little bit south, it doesn't work the same way it did the week before, think about how it affects all those numbers of the future expectations. What does that do mentally? Oh my goodness, I just put all this effort. I just made all this planning. I just told my significant other that, man, this is what I'm going to do. And now, oh man, can I do this? Oh man, you get yourself into a pretty ugly position very quickly, and gains create that. When individual traders start to have gains, that's what they will do, and it can be they get outside of their system, or they get that overconfidence, and it's no longer a process. It's now, hey, I had 2 events, and they are going to continue to happen all the time for me because I am that smart. No, it doesn't work that way. On the opposite hand, losses, they create what? Right? They create feelings or senses, right? What happens when a trader takes a loss? What type of feelings do they have? They start to become tepid, uncertain. They question. And then they ask, what did I do wrong? And this is sometimes the worst question in the world. In fact, most times it's the worst question in the world. You know what you did wrong most of the time is you didn't account for the fact that losses are part of the market and they happen. So you had an unrealistic expectation going forward, probably because of a gain that you had recently. And now you're all the way to that spectrum of what did I do wrong? And it's just absolute torture. Absolute torture. Then you go, well, I got to go back and redefine things. I have to reevaluate things. I have to change things, right? Become uncertain, tepid about the next trade. Do I get in? What do I do? Do I really want to go buy? What if this one goes wrong, right? All that second guessing, and then you know what happens? You miss a lot of opportunities, and then you go into that psychological torture of missed opportunity, and then you go, man, if I would have done those, jeez. And then your trade ends up turning and going your way, and then you're going, man, I was right. The stock went my way, and I lost money. You're basically stuck in all of these tortures, right? The market's not just throwing one at you. It's throwing 2, 3, 4. Torture number 5, and the last one that I'm going to address is time frame torture. I see this happen so much. Hey, I'm going to go get into something for my retirement account that I'm going to hold for a year and a half. In fact, this happened the other day. The other day I did a video on gold and on the long-term prospects of gold and on the bullish prospects of gold in the very long term. Got an email that night about somebody who went out and bought gold based on that video. Same person sent me an email this morning saying, what do I do with my gold? Gold's down big this morning. They went out and they bought a large position in gold for multiple years, and now, 48 hours later, they're reassessing and go, oh, what did I do wrong? Man, what's wrong here? We see this happen all the time. Monthly option traders, they get into a trade and now they're watching the minute chart. We see day traders get in based on the minute chart and then not get themselves out because, well, they like the daily chart. They're jumping time frames. This time frame jump is absolute torture because you're always going to be wrong or right in various time frames. The one that matters is the one you originally set up and the one that you're trading off of. It's one that, well, here, I have a trade on the board right now, right? And I know I'm not supposed to be talking about my trades except on Fridays, but I have a trade on the board. Here's Home Depot. I made this trade based on the daily chart in terms of my expectation of it moving on lower. And yesterday I talked about the price targets and everything else that I expect on this. I went and I was looking for an hourly entry signal, right? So yesterday it broke the 7-hour moving average right here, and so I went and jumped into it. This morning, Home Depot comes to the lower band. If my trade were a short-term trade based on the hourly chart, I'd have to get out. It's at support. It's at support. If that's my time frame, time to get out. But my time frame is based on the daily chart. I use the hourly chart to help get me in, to help find a decent spot to get in because of market conditions. But I know the hourly chart down here, we're going to find a little bit of support. Oh, it's gonna act as a little bit of support for a little bit. On the daily chart, there is no support, but it tells me there's going to be a slight pause here. What happens if now I'm watching the 1-minute chart? What happens if I bring up this torture? I'm going to stare at the 1-minute chart all day. Oh, man, it opened and it dropped and then it popped. It was great. Oh, what do I do? And now it's pulled back. Oh, it's rallying right here. What do I do? What do I do? Right? A million decisions to make. Man, I think it's going to take another little leg down. Okay, let me watch it for the next 10 minutes. Oh, man, it just went higher. I was wrong. Oh, man. Now what are you doing? You're now in right versus wrong. Here's my favorite. Man, you know what? Imagine if I would have sold the position when it opened this morning and then would have bought the position back into the position when it had rallied $1. That would have been awesome, right? I can't believe I missed that opportunity. You see the torture there? Right? You see the torture? All of a sudden, now I have a daily chart, a trade based off a daily chart, and I'm zooming into a 1 minute, and I'm in the missed opportunity in the right versus wrong. And what happens is when the trade is slightly in the green, this type of thing happens, the heightened sense. Now, if that green starts to go red, it starts to get into the loss, creating this tepid uncertainty. Where did I go wrong? Questioning. All over something that's very simple. Look, bearish daily chart. Boom, hourly trigger. I'm looking for a major breakdown. I'm looking for, hey, if this level holds, I'm good to go. That doesn't mean I have to stare at it, watch it, analyze it, talk about it every 5 minutes, look at it every 5 minutes, have alerts on my phone at all different price levels. You can see where that just psychological torture would come in and how it can just tear a trader apart. And we see this happen so much. And every trader's gone through it. Every trader has to fight these things. For some traders, one of these isn't bad. 2 of these aren't bad. 3 of these aren't bad. Maybe 1 is really bad. But from my experience, most traders go through all of these at some point in time. Some traders go through all of these every day, every hour of every day. There are some traders that I've said, look, hang it up, stop, quit. Why? Because they couldn't get through this torture machine. They were putting themselves through it so much. They couldn't see what the market was doing to them, and it was affecting their personal lives and their families and their jobs. And, this psychological torture was just absolutely oppressive. There are other people, it just rolls off their back. Who cares? Next. Right? They move on. They go for it. Hey, I want to go for this. I want to go for that. They love trading for what it is. And there's so many awesome things about trading. And they're able to kind of avoid these psychological tortures. I haven't met many of them, but there are a few of them. In fact, some of you hearing my voice are those who don't experience these to any real major degree. You trade, you do your thing, and you go. So how do you get through these? How do you battle these, right? How do you kind of say, hey, you know what, I'm going to move on through them? Well, one thing that I'll often, tell people is, hey, pause after gains. You have a big gain, pause. Take the afternoon off, take the next day off from trading, maybe even the next week. Pause. Pause after big gains. Okay? Because you got to avoid this gain, invincibility, confidence, expectation of future gains. Pause after those gains. Let that emotion, drop. For some, attack after losses. Now, you have to be careful because some people, when they have a loss, they're so... they're so eager to get back in that they make mistakes, that they don't do what they're seeing. They go with their gut. They go with, something that isn't within their system. They actually make it worse. But if you're a system trader, you get another signal, attack it. Attack it after the loss. Get that loss out of you. Go, right? Another thing, turn off the noise. Turn off the noise. I think people are surprised when they hear that I don't sit there and watch CNBC all day or Fox Business or any of that. I don't. It's something that I go through time periods where I will watch it and watch it a lot. And when I enjoy it, I will do that. But when I find that it's starting to bother me, when I find that it's starting to just be information overload, when I find that it's, you get that little sense of aggravation, turn it off. Turn off the noise, right? Just absolutely turn off the noise. Trade your plan. Make sure you're going back trading your plan. If you're trading your plan is able to overcome all of these. Your plan is able to understand the realities that are out there and to, not really incorporate these into it. So trade your plan. Don't trade your head. Don't trade your gut. Don't trade your emotion. Trade your plan. Yep, the emotions are there. You recognize them. They exist. Stay within your plan. And you know that, hey, you're not making decisions on those. And lastly, remove personal time frames. Man, I've got to make X amount of dollars in the market this month so I can pay my rent or my mortgage. My first thought is get out of the market. You're in the wrong spot. The market's about opportunity. The market is about opportunity on the market's time frames. It's not about opportunity on your time frame and when you need to make money. What happens with people is they get to this, man, I've got to make X dollars by X time, and it forces them to do some crazy stuff, some silly stuff, take excess risk. And they end up with bigger losses. Remove the personal time frames. Yes, it's fine to have, goals, objectives, and that type of thing, but understand that they're fluid. Understand that, look, you know what? If the market goes flat for 7 days, and you're an long option trader, you're probably not going to do much, right? If the market all of a sudden gaps up 20%, you're probably not going to end up doing much after that because it's such an anomaly. There are going to be times where something weird happens, something very strange happens. You don't really get a chance to trade your plan. And that'll throw those time periods off. And so remove those personal time frames. They don't do any good. They don't do anything to help. All they do is put added pressure. Now, if we really want to get into the market psychological torture machine, there's about 40 more points we could add to this. The market is a torture machine, a mental torture machine for so many. It is an absolute data deluge. It's an absolute just kind of information machine. And it's one that, different time periods, you're right, you're wrong, you woulda, coulda, you shoulda, and all of that. And it's all stuff you have zero control over. It's not like I can look at the market and go, man, if only I had done this different, I could have controlled the market and made it do this and this. Now, if my job is to go and dig ditches, right? And that's what I do every day. I go and I dig ditches. That's my job, right? If I call in sick and I don't dig a few ditches that day, what do I know? Right? What do I know? I did something maybe I shouldn't have, maybe I should have gone and, maybe I should have sucked it up and gone and dug those ditches. All right, I'll redouble my efforts. I'll get twice the number of ditches dug tomorrow. Can make up for it. In the market, you can't do that. In the market, it's one where, you know what? Your results don't necessarily dictate whether you're doing things right or wrong at that moment. Sometimes your short-term results are negative when what you've been doing is very positive, or your short-term results are actually really good, and you've just kind of batted a beehive, a hornet's nest. I see this happen all the time with credit spreads. get, hey, I've done a credit spread. I just made this amount of money. Man, these things are great. Second week, man, I just did more. These things are fantastic. I love credit spreads. I'm going to be able to do this much per month. I'm going to be able to do this, this, and this. Then they do another week. Man, these credit spreads are so golden. I don't know why everybody doesn't trade them. This is just phenomenal. Yeah, they're making money, but they don't realize the danger that they're putting themselves into. Yeah, you tell them about it. You say, hey, this is your risk. But they haven't felt it, right? They haven't realized it, so it's not that real. It's just hypothetical, maybe someday. And no, I'm good enough I can get around that. And then, unfortunately, you get the text that says, hey, man, I just got hammered. My account just got blown up. I just lost all my gains and then some. I don't know what to do. This is awful. Right? And so, it doesn't necessarily mean they did something different or wrong on that trade they got blown up on. And the ones that they made money on doesn't mean they did something right. Risk, reward, exposure. Those are the things that can be controlled. When you continue to talk to yourself that way, you continue to be able to push away the market tortures that are out there. Thanks for hopping on. Have yourselves a great one, and we'll talk to you soon. Take care.